Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup. I hope everybody's having a great trading session. A little happier today with Aussie kind of underperforming, stocks looking a little weaker. It's managed to help my positions out pretty well. I'm gonna cover just a few things though I think are very important going into today, and let's go into them. I just want to make sure I've got most people here. I think I've got probably about 3/4 of the people that normally get here, but people will trickle in. That's their fault if they're missing out and they're coming in late. Although I did start late. Was it yesterday? That was totally, was it yesterday or the day before yesterday? Totally my mistake. Anyway, so first and foremost, let's go over to the dollar Mexican peso. I do think this is a very important chart today. As I've been explaining to you guys, a close above 2032 is bullish. I took a little bit off this morning as we were around the, I want to say we were right around the 40 level, and I took some off that I own. And I'm sitting in the rest. I didn't want to take it all off because, you know, obviously, sorry, excuse me. I just ate and showered. So, but I didn't want to take it all off because I am bullish the dollar Mexican peso. And I think I'm going to have to, let's do it this way. Let's go. This is probably the best chart to help explain to you guys how I feel about the dollar Mexican peso, I believe, is this, right? Let's just do it like this. Whoop. Oop. Let's get rid of that. And let's do this. Right? That's probably the best chart to help you guys identify how I feel about the dollar Mexican peso. We've gone really far in equities, and I get the arguments. I mean, and it's so one-sided, it's not even funny. You know, we're going to have explosive growth and all the stimulus and COVID's going away, yada, yada. But you have to imagine this is priced in, I think, to a certain extent. Let me just talk S&P for a second, and let's just go, let me use this drawing tool, okay? This is COVID, right? This is what happened post-COVID. You know, we started rallying. The market probably at this point in time, right around here, decided, hey, it is, shoot, that's not what I want to do. Okay. Probably around this point, right around here, the market decided that, you know, oh, wait, that was maybe an overreaction. COVID's not going to be the end of the world. It's not like the movie Contagion where people get it and just die within 3 minutes. You know, it's not that. We have a lockdown. We're going to get past it. We got stimulus. Let's go. And then the market started to move quite aggressively higher, right? And so I think from, you know, from about, you know, May, June to right now was pricing in everything that everybody is arguing at this moment. Like strong growth, double whammy, you know, fiscal stimulus, monetary, you know, stimulus, yada, yada, yada. We're going to go back to normal, and, you know, we're going to have all this pent up demand. And I get all that. I get it. I get it. I think it's already priced in. Now, does that mean that stocks won't eventually, you know, continue higher? I was trying to grab this chart, but it's not working. It's like, I was trying to grab that. You know, does that mean stocks won't eventually move higher? No, I think they will. They'll continue higher. But what I think is going to happen is we're going to see a little bit of a pullback, you know, a correction. And you know what creates a correction? Maybe it's this variable, the COVID variance. But bottom line, commodities will go higher. Inflation is probably going to rise over the next year. And overall, the economy is going to be fine. It's not the end of the world. It's not the end of the human race. We're going to be fine. We're going to get past this, right? So that's what I think. But I do think a lot of this is priced in, and that's the thing about the equity markets where they're currently at. And so let's say the S&P finally does a little bit of a pullback, and let's just imagine that we get a that's not correct. I have to do it this way. Let me remove that. Let's go. Let's say we have the S&P corrects like 10%. Okay. And I'm going to draw that on the S&P chart. Well, how about the dollar Mexican peso has a 10% correction, or maybe even more, because it didn't really sell off the last couple of months that the equity markets have been rallying. Is it entirely possible that the dollar Mexican peso gets a really big move, if the S&Ps really do correct? I think so. And that's why I'm really very concerned. I'm very much focused on this breakout point, because I think if the S&Ps do, give us, let's just say a 10% correction, takes us to the bottom of the megaphone pattern. Oh, shoot, I didn't want that to happen. Right? Takes us to the bottom of the megaphone pattern. I'm trying to do this all at once, and it's not allowing me. I have to do it this way. Sorry, guys. So let's say we go to the bottom of the megaphone pattern, we correct 10%, and we drop back down towards 3,500. I don't think that's a far cry. It's not the end of the world. It hasn't disrupted. We're still in a bullish trend. What makes a bear market is if you correct 20%, right? I mean, and imagine that. Imagine if we had a 20% correction in equities and we go back to 3,100, which I don't think is happening. I really don't. I actually think that a 10% is probably more realistic, because that's going to be the 12% would take us back to the breakout point, which would be right here. Actually, it's 14%, but somewhere between 10 and 14% from current prices. I don't think that's like unheard of and uncommon based on where we've gone, especially if you throw some COVID variants. So again, what happens here? Well, the dollar Mexican peso might actually, rise 10%. We might actually see a significant move higher. Or, you see some of those other like commodity currencies like the Aussie, lower high. Let's say we correct, I actually don't think we'll correct 10%. I really don't. It'd be great if we dropped back to 70 cents, but I think more realistically, if the equity market's corrected 10%, the Aussie might get back down to 72, 73 cents. And that'll be wonderful, because it'll give us all an opportunity to buy at much better prices, and we'll make some money on this correction if it does transpire. So what am I most focused on right now? I am focused mostly on the S&P. I want to make sure that, that if this level breaks at 38.70, like this next, couple of days or the next week or two, then I'm prepared for it. How am I going to be prepared for it? Short emerging market currencies, short commodity currencies. Long the dollar, maybe against some of those, like dollar Norwegian krona, dollar Mexican peso, dollar Canadian, maybe short some Aussie US dollar, but I'd rather play those against crosses. I am still very bullish the pound New Zealand, the pound Aussie, and I do have some Euro Aussie, and I still have some Euro New Zealand that are both slightly out of the money, but it's fine. Again, if we do see a correction, like the Euro Aussie or the Euro New Zealand here is probably going back, to the mid 170s. Euro Aussie, probably back to the, 61, 64 cent range. So I'd be really happy if just we saw an S&P breakdown, because then I know I'm going to be prepared, and I want to make sure I have the right positions on for a possible 5 to 10% correction in equities. And really that's looking at the short commodity currencies, short emerging market currencies. You could one of the ones that we were trading before is like the US dollar, South African rand. I don't think this is a bad choice either, because of the false breakdown that we had. Man, I should have picked that up this morning. I wasn't even thinking about it. Actually, if it dips back down towards this 1455 level, I'll probably pick some up. I wouldn't mind if we got down there, but I'd love to see a dip. Let's see. Yeah, somewhere down here. I'd love to see a dip down here to be on the long side if we can get it, because it's manageable risk. You get down here and then your stop is below these lows. And look, that was the 161% extension. Perfect too, right? But I'd like to pick this one up and make sure I'm like long something like this if the S&P does actually break down. Has everything broken yet? No, but does it look promising at this point? It does, and the reason why I say that is when you take currencies like the dollar MEX that just ripped up. I mean, we literally moved. We moved today. What are we up 1%? We moved 1% higher today, and we're holding, right? So you hold a 1% gain in a currency. There's a good chance that we're going to see a continuation here. Jason said, asked Blake, do you think the strength of oil is helping keep the commodity currencies bid? Yes, I do. Normally in risk off, you see commodity currencies really come off, and today they seem to be holding up reasonably well. Yes, I believe that has to do with a couple things. I think crude oil, and believe it or not, I still believe a lot of it is cryptocurrencies. It's going to be really tough for risk to come down until you start to see a breakdown in like Bitcoin and Ethereum. I'm not saying that it can't happen. I'm just saying really to get like the animal spirits moving a little bit, you probably are going to have to see something, some bigger pullbacks in these cryptocurrencies. If they really start to pull back, like, again, you take a Bitcoin, we take a 10% haircut from here, or 20% haircut, which would be, back down to the breakout point. That's gonna get some juices flowing as far as, people going, oh crap, this is real risk off. I need to get out. But yeah, between that and, crude oil, which crude oil, is obviously really strong. But one of the things that we have to pay attention regarding crude as well, let me get over to crude oil. Okay. One of the things we got to pay attention to crude oil is this big 38% retracement. That's big. That's big time. You go to a monthly chart. I remember one of my closest friends, he called me from Minnesota, right here. And I remember being driving right by my, when I lived in McKinney, Texas. I was driving right by our clubhouse, and he calls me up and he's like, crude oil, it's going to $400. I'm like, what? It's going to $400. And we were at like 130 or something like that. And I'm like, dude, yeah, no, it's not. And he's like, man, I'm telling you, man, it's going. And I'm like, okay, I'm thinking in my own head, that's the top. We were maybe about a week away from that. And that like when I get people call me saying things like that, and I'm like, we'll never see those highs again. Now, I'm not saying that we can't now. Here we are 13 years later. But I do have to say that crude's had a hell of a recovery. It really has. And based on, inflationary pressures and probably, recovery, I don't think crude's really going to pull back all that much. I mean, we might get a move back down to the 50 level, in the next few weeks, but I think crude's going to be one of those commodities you want to be long as well, moving forward after some sort of significant pullback. So anyway, but it is holding up really well. And I have to say that it's this base that we built here, any move, it's kind of like the Aussie, if Aussie gets back to 72 cents, well, if crude oil makes it back to the mid 40s or maybe even 50, you probably want to be on the long side of that. Right. So anyway, anyway, I hope that that answers your question, and that gives you some kind of idea what I'm thinking at this point. I did want to let you guys know the euro sterling hit the 161% extension. I picked up just a wee bit long. I don't want to be bearish the pound necessarily, but I do think it could underperform the euro, and that's typical of if we get a risk off type of move, like if we actually see stocks come down, then the pound will probably underperform the euro. That means that the pound dollar may come down at a faster rate than the euro dollar does, and that's very common in a risk off scenario. So what I'm thinking happens here, and I want to buy a little bit more if we get down to 86, but what I think is going to happen here is we're going to drop right back down to this support and then bounce and maybe have a false breakdown at the end of the week. That would be cool. That seems logical. Doesn't mean it's going to happen. That just seems logical to me. Gavin says Barclays CEO was on Bloomberg this morning getting interviewed about results today. Was asked if Barclays would be getting involved in Bitcoin as other banks are looking at it. Said they are looking at it along with other cryptos, etc. How times have changed in the markets. Yeah, they have. And you know what? I mean, he's got to say he's looking at it. I mean, if he doesn't, everybody's going to say, "Oh, Barclays is behind the curve. They're not staying up with the times." How many banks really want to touch it, though? Like I said, with the volatility that you see in Bitcoin and other cryptocurrencies, how can you forecast correctly or even closely when you have such massive volatility? I don't know. I don't know what those answers are, but man, I'll tell you, like a story was last year, I guess. My wife was telling me about the story. This guy sold his $1.2 million home in Bitcoin last year. I mean, think about that. The guy that bought it, paid $1.2 million in Bitcoin. The guy who sold it, let's say he's still holding it, he's got 15 million in Bitcoin if he's still holding it. Now, I'm not saying that that's what he's doing, but I mean, how can you price assets in that type of currency? You have to treat it like a Tesla stock, or and speaking of which, and I'm just going to go over this and then we'll go. I guess what we should do, Apple, head and shoulder pattern developing here. Look at Tesla. Tesla's, attacking some pretty key support right now. And, Microsoft is in like no man's land right now, but it also looks like we might roll over a little bit here too. Looking at Microsoft, it's just, at or near all-time highs, but how about if Microsoft starts to give it up a little bit? So just keep an eye on some of these stocks that might be, starting to show some signs of weakness. All right, guys. I just wanted to hopefully leave you with that, and I hope you guys have a wonderful session. Remember, if you're new to listening to the Daily Roundup, this is the last one for the week. We do them Monday through Thursday. We don't do them tomorrow. So if I don't see you in the chat rooms, I will see you tomorrow morning on Face. So have a great afternoon. All right. Thanks, Hugo. Thanks, Brock. Thanks, Gavin, Jason. We'll see you guys all later. Bye-bye.